Question 1. Overview of disability insurance. Which of the following is a key difference between short-term and long-term disability insurance policies? A. Short-term disability insurance generally provides coverage for more than 2 years, while long-term disability insurance provides coverage for less than a year. B. Short-term disability insurance typically covers a portion of an individual's income for a period of 1 to 2 years, while long-term disability insurance provides coverage beyond 2 years or until retirement. C. Long-term disability insurance is generally paid as a lump sum, whereas short-term disability insurance provides periodic payments. D. Short-term disability insurance has higher monthly premiums due to the extended coverage period compared to long-term disability insurance. Answer B. Explanation. The primary difference between short-term and long-term disability insurance lies in the duration of the coverage. Short-term disability insurance typically covers a portion of an individual's income for a brief period, usually from a few weeks to a couple of years, typically lasting 1 to 2 years. Long-term disability insurance, on the other hand, offers coverage for a much longer period, often extending beyond 2 years or continuing until the insured reaches retirement age, depending on the policy. Option is incorrect because short-term disability typically lasts for a shorter period than long-term disability. Option C is incorrect because both types generally provide periodic payments. The long-term disability may sometimes include a lump sum payout in specific cases. Option D is incorrect because long-term disability typically has higher premiums due to the extended duration of benefits. Question 2. Disability insurance laws and regulations. Montana specific. In Montana, what is the maximum allowable waiting period for disability insurance before benefits can begin? A. 30 days. B. 60 days. C. 90 days. D. 180 days. Correct answer. C. Explanation. Montana regulations generally set a maximum waiting period or elimination period of 90 days for disability insurance policies. During this waiting period, the policyholder must be disabled before any benefits begin. This period ensures that only those with serious long-term disabilities qualify for full benefits. Option A. 30 days and option B. 60 days are incorrect as they are typically too short for most disability policies, while option D. 180 days exceeds the common maximum waiting period. It is important to check the specific policy terms, but in general, 90 days is the standard maximum waiting period allowed under Montana law. Question 3. Scenario-based question. Claims process and benefits. Mr. Turner, a 42-year-old office manager, has been diagnosed with severe rheumatoid arthritis, which is now making it impossible for him to work in his current role. He has a disability insurance policy that includes a 60-day elimination period and a monthly benefit of 60% of his income. Mr. Turner files a claim after missing work for 2 weeks due to his condition. After 40 days of being off work, he contacts his insurer for an update on his claim status and is informed that he has not yet met the elimination period. What should Mr. Turner do next? Continue to wait until the 60-day elimination period is met, as no benefits are payable until this time. B. Appeal the insurer's decision immediately as the elimination period is too long and unreasonable. C. File an additional claim for lost wages since the 60-day period is clearly excessive in his case. D. Begin part-time work if possible to reduce the claim payout during the elimination period. Answer A. Explanation. In this scenario, Mr. Turner is informed that his insurer has not yet processed his claim due to the elimination period not being met. This is standard practice in disability insurance claims. The elimination period is the period between when a disability occurs and when the insured can start receiving benefits. In Mr. Turner's case, the policy specifies a 60-day waiting period. Therefore, his claim cannot be processed until the full 60 days have passed, and he should simply wait for that time. Option B is incorrect because the elimination period is a legal requirement in most policies, including in Montana, and it cannot be bypassed. Option C is incorrect because the elimination period has already started and the claim cannot be submitted again. Option D is not a viable option because Mr. Turner's condition prevents him from working at full capacity, which would negate the purpose of receiving disability benefits in the first place. Question 4. Policy types and coverage. Which of the following accurately describes the difference between own occupation and any occupation disability coverage? A. Own occupation coverage pays benefits if the insured cannot perform any job, while any occupation coverage pays benefits if the insured cannot perform their specific job. B. Lone occupation coverage pays benefits if the insured cannot perform their own job, while any occupation coverage pays benefits if the insured cannot perform any job. C. Lone occupation coverage is available for short-term disabilities, while any occupation coverage applies only to long-term disabilities. D. Lone occupation coverage provides partial benefits, while any occupation coverage provides full benefits during the disability period. Answer B. Explanation. Own occupation disability insurance provides coverage if the insured is unable to perform the duties of their specific occupation, even if they are able to work in another job. On the other hand, any occupation coverage provides benefits only if the insured cannot perform any work that is reasonably available based on their training, education, and experience. Option is incorrect because the definitions of own occupation and any occupation are reversed. Option C is incorrect because both own occupation and any occupation coverage can be found in both short-term and long-term policies. Option D is incorrect because both types of coverage can provide partial or full benefits depending on the terms of the policy. Question 5. Disability insurance underwriting. Which of the following is a primary factor considered during the underwriting process for disability insurance? A. The insured's credit score and history of bankruptcy. B. The insured's occupation, health history, and age. C. The insured's marital status and number of dependents. D. The insured's social media activity and online reputation. Answer B. Explanation. During the underwriting process for disability insurance, the primary factors that are considered include the insured's occupation, health history, and age. These factors help determine the level of risk associated with insuring the individual and influence the premium rate, coverage amount, and exclusions in the policy. Option is incorrect because credit score and bankruptcy history are generally not considered for disability insurance underwriting. Option C is incorrect because while marital status and dependents might influence life insurance policies, they are not major factors in disability insurance underwriting. Option D is not relevant to underwriting for disability insurance as social media activity is not typically considered in the underwriting process. Question 6. Disability insurance claims process. A policyholder's disability claim is denied after they are found to be ineligible due to a pre-existing condition exclusion. What is the policyholder's next best course of action? A. Wait for the insurance company to automatically reconsider the claim after a period of time. B. Appeal the denial, as pre-existing condition exclusions are usually not enforceable in Montana. C. Submit an appeal with medical documentation that refutes the pre-existing condition diagnosis. D. Seek legal action immediately to force the insurer to cover the claim. Answer C. Explanation. If a disability claim is denied due to a pre-existing condition exclusion, the best course of action for the policyholder is to submit an appeal with medical documentation that supports the argument that the condition is not pre-existing or that the disability was caused by. In new event, insurers often allow appeals if new evidence is provided, such as updated medical records or expert opinions that challenge the exclusion. Option is incorrect because insurance companies do not automatically reconsider claims without a formal request. Option B is incorrect because while pre-existing conditions may be excluded, such exclusions are enforceable in Montana as long as the terms are clearly stated in the policy. Option D is premature legal action should be a last resort after all appeal options have been exhausted. Question 7. Disability insurance fraud and ethical considerations. Which of the following best describes an unethical practice when handling disability insurance claims? A. Providing the insurer with medical records to verify the policyholder's claim of disability. B. Encouraging a policyholder to file a claim even if the disability is not severe enough to qualify under the policy terms. C. Reviewing a claim thoroughly to ensure that all necessary documentation is submitted. D. Assisting a policyholder in appealing a claim denial by providing accurate, truthful evidence. Answer B. Explanation. Encouraging a policyholder to file a disability claim when their condition does not meet the severity required by the policy is unethical and considered fraudulent. It misrepresents the true nature of the disability, potentially leading to claims being paid for conditions that should not be covered. Option. Look, it is not unethical, it is necessary for verifying claims. Option C seeks a standard and ethical practice to ensure the correct documentation is in place. Option D is also ethical as helping a policyholder appeal a denial using accurate evidence is part of an insurance professional's responsibility. Question 8. Taxation and disability insurance. Which of the following best describes the taxation of disability insurance benefits in Montana? A. Disability insurance benefits are always taxable regardless of how the premiums were paid. B. Disability insurance benefits are tax-free if the premiums were paid with after-tax dollars. C. Disability insurance benefits are only taxable if they exceed a certain income threshold. D. Disability insurance benefits are tax-free if the premiums were paid by the employer. Answer. B. Explanation. Disability insurance benefits are generally tax-free if the premiums were paid with after-tax dollars. This means the insured has already paid taxes on the premium payments, so the benefits they receive will not be taxed. If the employer pays the premiums and the premiums are not included in the employee's taxable income, the benefits may be subject to taxation. Option B is incorrect because taxability depends on how the premiums are paid, not just the nature of the benefit. Option C is incorrect because disability benefits are generally not subject to taxation based on income thresholds unless the premiums were deducted pre-tax. Option D is incorrect because employer-paid premiums can make the benefits taxable to the employee. Question 9. Impact of disability on other insurance products. How does disability insurance typically interact with life insurance? A. Disability insurance can be used to purchase life insurance in the event of a claim. B. Disability insurance benefits are typically deducted from life insurance death benefits. C. Disability insurance provides benefits that help maintain life insurance premiums if the policyholder becomes disabled. D. Disability insurance can replace the need for life insurance during periods of disability. Answer. C. Explanation. Disability insurance is designed to help replace lost income due to disability, which can be used to maintain life insurance premiums while the policyholder is unable to work. This ensures that the individual's life insurance coverage continues during their disability. Option Look is incorrect because disability insurance benefits are not typically used to purchase life insurance. Option B is incorrect because disability insurance benefits do not impact life insurance death benefits. Option D is incorrect because disability insurance does not replace life insurance. It is meant to provide income replacement while the insured is disabled. Question 10. Advanced disability insurance topics. Which of the following best describes how disability insurance applies to self-employed individuals? A. Self-employed individuals cannot qualify for disability insurance because they do not have traditional income. B. Self-employed individuals may purchase disability insurance based on their average income, but the premiums tend to be higher. C. Disability insurance benefits for self-employed individuals are always tax-free regardless of how the premiums are paid. D. Self-employed individuals are typically excluded from all disability insurance coverage unless they have employees. Answer. B. Explanation. Self-employed individuals are eligible to purchase disability insurance, but the premiums may be higher than for traditionally employed individuals due to the perceived higher risk and lack of employer-provided benefits. The benefits are typically based on the individual's average income over a specified period. Option is incorrect because self-employed individuals are eligible for disability insurance, that they may face more stringent requirements. Option C is incorrect because, like other individuals, the taxability of benefits depends on how premiums are paid. Option D is incorrect because self-employed individuals can purchase individual disability policies even without employees. Question 11. Social Security Disability Insurance (SSDI). Which of the following is a requirement to qualify for Social Security Disability Insurance (SDIA)? The individual must have worked in a job covered by Social Security for at least 5 years. B. The individual must be under the age of 55. C. The individual must have a disability that is expected to last for at least 12 months or result in death. D. The individual must have a minimum of 20 years of full-time work experience. Answer. C. Explanation. To qualify for SSDI, an individual must have a disability that is expected to last for at least 12 months or result in death. Option is incorrect because while working in a job covered by Social Security is required, it does not need to be for 5 years specifically. Option B is incorrect because there is no age limit for SSDI. Eligibility is based on work history and disability. Option D is incorrect because 20 years of full-time work experience is not required, but the number of work credits is determined by the individual's work history. Question 12. Group disability insurance. Which of the following is a key characteristic of group disability insurance? A. It typically offers lower premiums than individual disability policies. B. It is often more customizable to meet individual needs than individual policies. C. It covers only short-term disabilities. D. It is always mandatory for employers to offer group disability insurance. Answer A. Explanation. Group disability insurance generally offers lower premiums than individual policies because the risk is spread across a large group of people. Option B is incorrect because group disability insurance is usually less customizable than individual policies. Option C is incorrect because group disability insurance can provide both short-term and long-term disability coverage depending on the plan. Option D is incorrect because employers are not required to offer group disability insurance. It is offered at the employer's discretion. Question 13. Waiting period in disability insurance. What is the primary purpose of a waiting period elimination period in a disability insurance policy? A. To allow the insurance company to review the insured's medical history. B. To ensure the insured's disability is permanent before benefits are paid. C. To require the insured to be disabled for a specified period before benefits are paid. D. To reduce the premium amount by requiring the insured to wait before claiming benefits. Answer C. Explanation. The waiting period, also known as the elimination period, is the amount of time that must pass after the disability begins before the insured is eligible to receive benefits. It helps reduce premiums and ensures the disability is of sufficient duration before the insurer starts paying benefits. Option Merck is incorrect because the waiting period does not involve the review of medical history, but rather time elapsed since the onset of disability. Option B is incorrect because the waiting period does not determine the permanence of a disability. Option D is incorrect because while the waiting period affects the premium, its primary purpose is to establish eligibility for benefits. Question 14. Total versus partial disability. Which of the following best defines a partial disability in the context of disability insurance? A. A condition that makes it impossible for the insured to work in any capacity. B. A condition that limits the insured's ability to perform some but not all duties of their occupation. C. A condition that causes permanent impairment, making it impossible to return to any job. D. A condition that prevents the insured from performing only household tasks. Answer B. Explanation. Partial disability refers to a condition that prevents the insured from performing some, but not all, of the duties of their occupation. This allows for partial benefits to be paid based on the reduced ability to work. Option refers to total disability, not partial. Option C describes a permanent total disability, not partial disability. Option D is incorrect because partial disability refers to the inability to work, not just household tasks. Question 15. Cost of living adjustment (COLA) in disability insurance. What is the purpose of a cost of living adjustment (COLA) rider in a disability insurance policy? A. To adjust the premiums each year based on inflation. B. To increase the benefit amount over time to keep up with inflation. C. To ensure the insured's benefits are tax-free. D. To reduce the waiting period for benefits. Answer B. Explanation. A cost of living adjustment (COLA) rider increases the benefit amount over time to help the insured maintain their purchasing power as inflation rises. Option is incorrect because COLA applies to benefit amounts, not premiums. Option C is incorrect because COLA does not affect the taxability of benefits. Option D is incorrect because COLA does not impact the waiting period but rather the benefit amount. Question 16. Disability insurance benefit period. Which of the following best describes the benefit period of each disability insurance policy? A. The time during which the insured is covered under the policy. B. The length of time the policyholder must wait before receiving benefits. C. The maximum amount of time the insured can receive benefits for a disability. D. The time frame in which the policyholder must report their disability claim. Answer C. Explanation. The benefit period is the maximum amount of time that disability insurance benefits will be paid to the insured during a single disability event. Option B refers to the policy's coverage period, not the benefit period. Option B refers to the waiting or elimination period, not the benefit period. Option D refers to the claims reporting period, which is separate from the benefit period. Question 17. Short-term disability insurance. Which of the following is a characteristic of short-term disability insurance? A. It typically provides benefits for a longer duration than long-term disability insurance. B. It provides a higher percentage of income replacement than long-term disability insurance. C. It usually covers disabilities lasting from a few weeks to 6 months. D. It is generally more expensive than long-term disability insurance. Answer: C. Explanation: short-term disability insurance typically covers disabilities that last from a few weeks to 6 months. It is designed to provide temporary income replacement during short-term illnesses or injuries. Option A is incorrect because short-term disability insurance provides benefits for a shorter duration than long-term policies. Option B is incorrect because long-term disability insurance often provides a higher percentage of income replacement, but over a longer period. Option D is incorrect because short-term disability insurance is generally less expensive than long-term disability insurance. Question 18. Disability insurance riders. What does the residual disability rider in a disability insurance policy provide? A. It provides additional benefits if the insured is partially disabled and unable to work full-time. B. It provides benefits only if the insured is unable to return to work for more than 1 year. C. It provides full benefits if the insured is partially disabled but still working. D. It eliminates the waiting period for benefits. Answer A. Explanation: the residual disability rider provides additional benefits if the insured is partially disabled and unable to work full-time but can still perform some duties. It helps to replace income lost due to partial disability. Option B is incorrect because the rider provides benefits for partial disabilities, not just those unable to return to work for a year. Option C is incorrect because the rider provides partial benefits based on the degree of disability, not full benefits. Option D is incorrect because the residual disability rider does not eliminate the waiting period. Question 19. Disability insurance exclusions. Which of the following would most likely be an exclusion in a disability insurance policy? A. A disability caused by a workplace injury. B. A disability resulting from a pre-existing condition. C. A disability resulting from a car accident. D. A disability resulting from an illness covered by the policy. Answer B. Explanation: a common exclusion in disability insurance policies is a disability resulting from a pre-existing condition, especially if it occurs within a specified period after the policy is purchased. Option A, C, and D would typically be covered if they result in disability, depending on the specifics of the policy. However, pre-existing conditions are a frequent exclusion, particularly if the condition was diagnosed before the policy's start date. Question 20. Taxation of disability insurance benefits. Which of the following statements about the taxation of disability insurance benefits is correct? A. Disability insurance benefits are always tax-free, regardless of how the premiums were paid. B. Disability insurance benefits are taxed if the premiums were paid with after-tax dollars. C. Disability insurance benefits are tax-free if the premiums were paid with pre-tax dollars. D. Disability insurance benefits are always taxable regardless of how the premiums were paid. Answer B. Explanation: disability insurance benefits are typically tax-free if the premiums were paid with after-tax dollars. However, if the premiums were paid with pre-tax dollars, such as through an employer-sponsored plan, the benefits may be subject to taxation. Option No is incorrect because taxability depends on how the premiums are paid. Option C is incorrect because benefits are taxable if premiums are paid with pre-tax dollars. Option D is incorrect because the taxation of benefits depends on the premium payment method. Question 21. Own occupation versus any occupation. Which of the following best defines the own occupation definition of disability in a disability insurance policy? A. The insured must be unable to perform any job for which they are qualified. B. The insured must be unable to perform the duties of their specific occupation. C. The insured must be unable to work in any occupation, regardless of training. D. The insured must be unable to work due to a pre-existing condition. Answer B. Explanation: the own occupation definition of disability means the insured is unable to perform the duties of their specific occupation even if they could work in another job. Option Merck refers to the many occupation definition, which is more restrictive. Option C is also an any occupation definition. Option D is not a typical criterion for defining disability in policies. Question 22. Social Security and disability insurance. How does Social Security disability insurance (SSDI) interact with private disability insurance? A. Private disability benefits are always reduced by SSDI benefits. B. SSDI benefits are paid in addition to private disability insurance benefits. C. Private disability insurance policies automatically provide SSDI benefits. D. Social Security disability is only available to individuals who do not have private disability insurance. Answer B. Explanation. SSDI benefits are typically paid in addition to private disability insurance benefits unless there is a coordination of benefits clause in the private policy that reduces payments. Option is incorrect because private benefits are not automatically reduced by SSDI. Option C is incorrect because private disability insurance does not automatically provide SSDI benefits. Option D is incorrect because SSDI is available regardless of whether an individual has private insurance. Question 23. Income replacement percentage. What is the typical income replacement percentage for long-term disability insurance? A. 1020% of the insured's monthly income. B. 5070% of the insured's monthly income. C. 80100% of the insured's monthly income. D. 100% of the insured's monthly income. Answer B. Explanation. Non-term disability insurance typically replaces 5070% of the insured's monthly income depending on the policy. Option is incorrect because this percentage is lower than typical coverage. Option C and D are incorrect because most policies do not offer 80100% of the insured's income to avoid creating an incentive to remain disabled. Question 24. Pre-existing condition exclusion. Which of the following is a common characteristic of the pre-existing condition exclusion in a disability insurance policy? A. It applies to any condition the insured had before the policy was issued. B. It applies only to conditions diagnosed before the policy's effective date. C. It does not apply to conditions that were disclosed in the application. D. It applies only to conditions that were diagnosed after the policy is issued. Answer B. Explanation. The pre-existing condition exclusion typically applies to conditions that were diagnosed or treated within a certain period, often 6 months before the policy's effective date. Option is incorrect because the exclusion usually only applies to conditions diagnosed before the policy was issued, not any prior condition. Option C is incorrect because conditions disclosed in the application are typically covered. Option D is incorrect because pre-existing conditions, not post-policy diagnoses, are excluded. Question 25. Waiver of premium rider. What is the purpose of the waiver of premium rider in a disability insurance policy? A. It allows the insured to receive a refund of premiums paid if they become disabled. B. It eliminates the waiting period for benefits to begin. C. It suspends premium payments if the insured becomes disabled, allowing continued coverage. D. It increases the benefit amount if the insured becomes disabled. Answer C. Explanation. The waiver of premium rider allows the insured to suspend premium payments if they become disabled and still retain coverage. Option is incorrect because the rider does not offer a refund of premiums. Option B is incorrect because the waiver of premium rider does not affect the waiting period. Option D is incorrect because the rider does not increase benefits, just suspends premium payments. Question 26. Partial disability benefits. Under most disability insurance policies, partial disability benefits are typically paid when A. The insured can no longer perform any work-related duties. B. The insured can perform some duties, but not all of their regular tasks. C. The insured's disability lasts for more than 12 months. D. The insured becomes completely disabled but continues to work part-time. Answer B. Explanation. Partial disability benefits are usually paid when the insured can perform some duties, but not all of their regular tasks. This enables the insured to receive benefits that reflect their reduced ability to work. Option refers to total disability, not partial. Option C is incorrect because partial disability can occur at any time, not just after 12 months. Option D does not typically apply to partial disability. Question 27. Long-term disability (LTD) versus short-term disability (STD). What is the main difference between long-term disability (LTD) and short-term disability (STD) insurance? A. LTD provides coverage for up to 5 years, while STD provides coverage for up to 2 years. B. LTD provides benefits for a longer duration than STD. C. STD covers only job-related disabilities, while LTD covers all disabilities. D. STD benefits are always higher than LTD benefits. Answer B. Explanation. The primary difference between LTD and STD is that LTD provides benefits for a longer duration than STD, often lasting several years or until retirement age, while STD typically covers only short-term disabilities, usually up to 6 months. Option Look is incorrect because the duration of coverage varies, but LTD typically lasts longer than STD. Option C is incorrect because both STD and LTD can cover non-job related disabilities. Option D is incorrect because LTD benefits are generally higher due to the longer benefit period. Question 28. Residual disability versus total disability. Which of the following statements is correct regarding residual disability and total disability? A. Residual disability benefits are paid if the insured can no longer perform any work duties. B. Total disability benefits are always paid in full regardless of the degree of disability. C. Residual disability benefits are paid when the insured is unable to perform some but not all duties of their occupation. D. Total disability is defined as any disability that lasts longer than 6 months. Answer C. Explanation. Residual disability benefits are paid when the insured is unable to perform some but not all duties of their occupation. Total disability, in contrast, generally means the insured is unable to perform any work duties at all. Option Look is incorrect because residual disability refers to partial, not total inability to work. Option B is incorrect because total disability benefits are usually paid in full but depend on the policy's terms. Option D is incorrect because total disability is not defined by the duration of the disability. Question 29. Taxability of disability benefits. How are disability insurance benefits typically taxed when premiums are paid with pre-tax dollars? A. The benefits are fully taxable. B. The benefits are partially taxable. C. The benefits are tax-free. D. The benefits are taxable only if the insured's disability lasts longer than 1 year. Answer. Explanation. When premiums are paid with pre-tax dollars, disability benefits are typically fully taxable as income. This is because the premiums were paid with pre-tax money, so the IRS considers the benefits to be income. Option B is incorrect because the benefits are usually fully taxable. Option C is incorrect because benefits paid from pre-tax premiums are taxable. Option D is incorrect because the duration of the disability does not affect the taxability of the benefits. Question 30. Recurrent disability. In a disability insurance policy, a recurrent disability is typically defined as a disability caused by an unrelated illness or injury after recovery. B. A disability that recurs within a certain period after a previous disability ends. C. A disability that occurs after a long period of being able to work. D. A disability that occurs only after an individual has been employed for 5 years. Answer B. Explanation. A recurrent disability refers to a disability that recurs within a certain period, usually 6 months or a year, after the insured has returned to work or recovered from a previous disability. This often allows the insured to receive benefits as if the disability is ongoing without a new waiting period. Option is incorrect because recurrent disabilities are typically related to the prior disability. Option C is incorrect because recurrent disabilities are not based on the duration of work capability. Option D is irrelevant to the definition of recurrent disability.